Thank you for joining us at XM.com for this Forex Preview video. The Bank of England meets for the first time this year. It's an event that will gather a lot of attention as investors will be eager to see how big a rate hike policymakers will deliver this time. I'm Cristina Marujos. With me today is our investment analyst, Cristina Pertenido. Although the latest economic data revealed that the United Kingdom is still at risk of a recession, Cristina, it seems that a slowdown in tightening is still premature. So what are we likely to see at Thursday's meeting?
Hi, Christina. Indeed, the latest economic data out of the UK has been gloomy. Of course, from a technical perspective, the positive surprise in the monthly GDP data for October and November has somewhat signaled that the economy might have escaped a recession, but that doesn't avert an economic contraction later in the year because business PMI surveys and consumer confidence data are clearly reflecting that the economy is heading to a danger zone. The risk of recession gets bigger if we consider that government's budget hit a record deficit lately and a million borrowers will switch from fixed rates to higher fluctuating interest rates. So the effects from previous rate hikes have yet to show up, and adding the Brexit distortion, which limits the supply of workers and makes trade with nearby countries difficult. I think that the UK economy may have not escaped the recession. Probably later we might see an economic contraction later in the year. The economic outlook is of course uncertain, and that is just a likely scenario. Anything could happen, of course, but as regards the Bank of England, the central bank has a mandate to pressure inflation back to its 2% target. And despite the continuous rate hikes over the past year, it's still far away from reaching its goal because inflation keeps growing at double digits, currently at 10.5%. It has slowed down from the 11.1% peak in October, but that level is still risky for the UK economy by itself. And we shouldn't forget that wages are rising at a faster pace now, and they may go even higher because workers in almost every industry are on strikes asking for higher payments to afford the expensive cost of living. That in return might create more inflation because the unemployment rate is still at multi-year lows and consumption remains resilient. So what the Bank of England is expected to do this Thursday is to focus on its price stability mandate to its inflation mission and deliver another bold 50 basis point rate hike, although some policymakers may perhaps debate a softer 25 basis point rate hike because of the uncertain economic outlook. Maybe the governor Andrew Bailey may backtrack from his previous gloomy growth projections of a longest recession ever, painting a slightly improved economic picture instead, which, we have seen Eurozone and the US performing better than expected. So given the stronger than expected GDP data out of the UK and the resilience in the labor market, the governor may use that excuse to deliver another bold rate hike this time.
And now let's turn to the market reaction. The pound has been on the sidelines lately. How could it perform after the Bank of England policy meeting?
If someone looks at pound dollar, the pair has been mainly driven by the US dollar lately, and particularly by expectations that the Fed will cut the pace of its rate hikes, or in other words, the Fed will be less hawkish this year. Now, for the pound to keep rising, the Bank of England will need to reduce its rate differentials with the Fed by maintaining an aggressive monetary tightening for a bit longer. So a 50 basis point rate hike and the hawkish forward guidance, which might signal that the Bank of England might be slower in reaching its terminal rate, or it might surpass its terminal rate, which is currently expected to come at 4.5%. Such a communication could help the British pound to resume its uptrend against the US dollar. Well, personally, I think that this might be the last 50 basis point rate hike for now, given the dark economic outlook. Perhaps rate hikes may continue during the coming months, but I think the central bank will keep We'll keep all options open for now because the effects from previous rate increases have yet to show up. In this case, it will be interesting to see if it plans to pause its rate increases at 4.5% in May, as investors suggest. If that proves to be the case, or if it unexpectedly delivers a 25 basis point rate hike this week, suggesting that the terminal rate may be lower, that could lead the pound to lower, I think.
Christina, thanks so much. This was a Forex Preview here at xm.com.